Hey, what's up traders? So in this video you get to learn what a fair value gap is, why it matters, and how to use it for better trade entries. So let's get started. Alright, so what is a fair value gap? A fair value gap is a price area skipped during a fast market move where buyers and sellers didn't trade, which creates an imbalance for price to fill the gap, offering potential trade opportunities. Alright, we will move over to the example of a fair value gap. Alright, so these are the examples of a fair value gap. We had a bullish fair value gap and we had a bearish fair value gap. Now, starting with the bullish fair value gap, we had price created a shift of structure at this point, breaking this level of consolidation. Now, what we expect price to do is for price to come back at that very imbalance, which is the fair value gap that was formed, expecting price to fill it up in order to keep pushing towards the direction. We also had another one at this point. After we must have seen this very break of structure at this very level, we had that imbalance that was created at this point, which is the fair value gap. Now, what we are basically expecting price to do is, after we must have seen the break, we should expect price to come back and at that very fair value gap, filling it up to keep pushing towards the upside. That is basically how the bullish fair value gap works. And for a bearish fair value gap, we had price created a shift of structure at this point, breaking this very level. Now, after price must have broken that very level, we had a massive imbalance that was formed or created at this point, which is the fair value gap. Now, basically, what we expect price to do is to retrace back inside of that very fair value gap that was formed, fill it up to keep pushing towards the direction of the trend. Now, we also had another one which was broken at this point. This one is more of like a break of structure. Now, after we had that break of structure, we still had another imbalance that was created at this point. Now, basically what we are expecting price to do is to retrace to that very fair value gap that was formed, filling it up to keep pushing towards the direction of the trend. That is basically how the bearish fair value gap works. Alright, so I'll be taking you guys to the chart and I'll be showing you guys how this fair value gap works, how to draw them, and how to trade them. Alright, so looking on the chart, this is what a bullish fair value gap looks like. So now we had price break this very level, we had price shifted to the upside, breaking this very level of supply. So now after we had price broke that level of supply, we had this very FVG level that was formed around this point. So basically what I'm supposed to do is to map out that very FVG level that was formed at that point, expecting price to come back at that point in order to fill it up to keep pushing towards the upside. So looking at what price did at that point, as soon as price came back to that very point, coming to fill it up, we had that aggressive buy towards the upside. So basically, if I want to be interested to buy at this point, I want to be interested to buy at this very level, my SL should be below the FG level that was formed and my TP should be above. So now, as soon as price keep pushing towards the upside, we also had another break of structure at this point. We had this very rally towards the upside, breaking this very level. So now basically we had the FG level that was formed at this point. Now, what do we expect? We expect price to come back at that very point, fill it up to keep pushing towards the direction of the trend. So now looking at what price did at that point, we had price came back at that point and we had the reaction towards the upside. So if I want to be interested to buy at this very level, I want to be interested to buy at this point, then my SL should be below that fair value gap and my TP should be above. So we also had another FG level that was formed at this point. We had another FG level that was formed at this very point, but price never made it to that point. We also had another one that was formed at this very point. Now we had price created a shift of structure at this point, breaking this very level. Now after that level was broken, we had a fair value gap which was formed at this point. So basically what I'm supposed to do is to wait for price to come back to that FG level that was formed, fill it up to keep pushing towards the direction of the trend. Looking at what price did at that point, you had price came back at that FG, that fair value gap, filling it up to keep pushing towards the upside. So if I want to be interested to buy, I want to be interested to buy at this very point. My SL should be below that FG level that was formed, and my TP should be above. You understand? So that is basically how the fair value gap works. We also had at this very FG level that was formed at this point. You guys know that price didn't actually make it to that very level. So basically, when price came at that very level, we had that reaction towards the upside at that very FG level. So we had a reaction towards the upside. So if I want to be interested to still buy, I want to be interested to buy at this point. My SL should be below that FVG level, and my TP should be above this point. So that is basically how the bullish fair value gap works. So I will be moving you guys to the bearish fair value gap. Alright, so this is how the bearish fair value gap looks like. Now we had price breaks out of this very level, and after we saw that break, we had a fair value gap that was formed and a balance that was formed at this very level. So what I need to do is just to map out that very FG level that was formed, wait for price to come back and fill it up in order to sell. So basically, as soon as price came back at that very FG level which was formed, price filled it up and we saw that reaction towards the downside. So if I want to be interested to sell at this very FG level, I want to be interested to sell at this very point, my SL should be above that FG level that was formed, and my TP should be below. So as soon as price keep pushing towards the upside, you also had another FG level that was formed at this point. You had price created that break, leaving us with an imbalance, which is the FG, the fair value gap. Now what I want to do is to map out or to draw out that fair value gap which was formed, then wait for price to come back down that point to fill it up in order to sell. So basically, as soon as price came back to that very point, we had that aggressive push towards the downside. So if I want to be interested to sell at this point, I want to be interested to sell at this point, my SL should be above that FG level, my TP should be below. We also had another FG level which was formed. This one is more of like a minor break of structure. We had price broke this very level. After price broke this very level, we had that little FG level which was formed at that point. Let me reduce this. Alright, so we have that little FG level which was formed at this point after we saw that minor break. So basically what I'm expecting to do is to draw out that FG level which was formed. Expect price to come at that point, fill it up to keep pushing towards the direction of the trend. So basically, if I want to be interested to sell, I want to be interested to sell after price must have come back at this point. I want to be interested to sell at this level. My SL should be above that FG level, the fair value gap which was formed, and my TP should be below. We also had another one after we had this break. We had another FG level that was formed at this very point. So basically what I'm supposed to do is to draw out that FG level which was formed. Expect price to pull back inside of that FG level, filling it up to keep pushing towards the top, towards the downside. So if I want to be interested to sell, I want to be interested to sell at this very level. My SL should be above that fair value gap, and my TP should be below. And that is basically how to trade the bearish fair value gap. So that wraps up today's video on fair value gap. If you find this video helpful, please make sure you like, share and subscribe. Thanks for watching, and I will see you in my next video.